What's up, guys? How is everybody doing? Long time. Give everyone a second. Got a pretty light stream, it looks like. Start in a minute. How's everybody doing? It's been a while since I've hopped on a stream. I was sick for the last week, last 4 or 5 days. Just give me a sound check whenever you can, and we'll get it started. Good sound? Hey, what's up, guys? Hey, what's up, Simon? Oh, cool. All right, so I'm assuming that everyone can hear me nice and clearly. Yeah, feeling better now. Absolutely feeling better. Felt like a truck hit me for, I don't know, 4 or 5 days. And that sucks. Fatigue for me, feeling crappy for me is like, I'm hyper vigilant about my overall state and how I feel, especially when it comes to mental acuity. So when I'm sick, like I cannot put together a sentence or a thought. I am like running MS-DOS. So that was really pissing me off. I barely traded. I just didn't have it in me to even sit at the computer and trade. But yeah, I'm feeling better now, which is awesome. Hydrated a lot. Took vitamin D. Spent a lot of time outside. Got fresh air. Did a little bit of exercise. And then would drink like this turmeric, lemon juice, cayenne, apple cider vinegar tonic basically every day. And yeah, today I finally feel good. But the stream's light, so I guess people forgot that we have a YouTube, or maybe everyone's just accustomed to us being on Twitch now or me being on Twitch now for the last 2 weeks. But yeah, we're gonna go back and forth between Twitch and YouTube. No, I don't know if I had Corona. I mean, I feel like with Corona and Delta, everyone's forgotten that like people still get sick from other things. Not sure. I mean, I had coronavirus the January of 2020, maybe January or February. I can't remember. And that was quite noticeable. But this could have just been flu, cold, whatever. Who knows now, right? Everything is coronavirus now. Rumor has it that I had Delta. Now I got vaccinated and everything. So, all right. So yeah, we were on Twitch the last couple of streams. Like I said, we're gonna go back and forth just to get all the formalities out of the way first. If you're watching the stream for the first time, my name is Ryan, also known as Cantor and Clark on Twitter. Myself and my partner, we are the co-founders of BlockRoots. This stream is also brought to you by our partners. We've been partners with them now. They run a phenomenal exchange, Phemex. So this is something that obviously I mentioned in every stream. They offer spot, they offer contracts, and they also offer yield if you want to park your funds into USDT, stablecoins. That's up to 10% APY. And they have a flexible version as well where you could lock it in for 24 hours. Importantly, right after this volatility, they did not have any issues. All right, I was executing quite well. And on top of that, I say that if you look below and you see that we have a couple links for certain things, the link below, Phemex.trade, it normally is accompanied with some type of reduction in fees or some type of bonus. This time, it not only has a bonus, but there is we have a special link, and people who sign up under our link, if you deposit up to 1 Bitcoin, so it's 1 Bitcoin, they're going to give you $1,000. So 1 Bitcoin, I'm pretty sure it's like you have to have one back and forth, Bitcoin worth of volume. So it might be over like 50K. So basically open and close a Bitcoin, open and close a Bitcoin position, and that qualifies. And they're going to deposit 1K into your account. And you can do with that what you want. Okay, so we're going to talk about BTC. We'll briefly talk about Amazon and Tesla. And you know what I think was, and I'm pretty sure that this is a shared opinion by many traders, what the catalyst was. Maybe not necessarily what the catalyst was, what the reasoning was for this this type of movement, which was, you know, I feel like it was probably like a 4-5 sigma movement, you know, compared to the kind of activity that we've had up to this point. So it was very significant, but I do think that it is worth being cautious considering what the cause of the move was, what it implies, right, and where we are right now. Okay. So let's get it started. So again, on behalf of our partners, thank you. My partner, Josh Rager, who is right now on vacation. Yeah, let's get it started. Okay. So I'm going to move the chat. I'm getting used to a new mouse, so it doesn't have like the hotkey. I don't have the hotkey set up for the drawings. So I'm going to have to use the keyboard effectively to hotkey certain drawing tools. All right, so there's like background music right now. Does that bother you guys? I don't know if you could hear it slightly. Can you hear it? Maybe not. I just want to make sure that it's not bothering anybody. It's going between songs right now. It's kind of mellow. Not that it's not bothering anybody, but that it's not obstructing the sound. All right. Cool. Okay, so now that we've got that Phemex introduction out of the way, again, up to 1K, let's talk about BTC. All right, so, you know, last couple of streams on Twitch, in the newsletter, publicly posting, what I was saying was I don't like to look for any kind of swing short, right, for a trending move. Okay, so this is spreads. As we were continuously breaking below the lows, right, and it was looking like maybe we were going to have some type of expansion through the range, right, resolving in one direction finally. It looked like there was a ton of weakness. Okay, there was plenty of evidence to assume that price had looked weak up to this point. As an important reminder, one thing that I kept saying was, you know, Bitcoin sometimes looks like it is weakest before it is about to put in a ridiculous move. All right, because people are sort of piling in with the expectation that a breakdown is going to occur, that a further move is going to occur. And when price doesn't resolve in that direction, it's more of a sign of strength. And at that point, it is also a trap. So I don't look for trending short positions, right? I don't ever want to catch a big short. Like I said many times before, I'd rather prioritize on finding some type of low in the dump so that I could take advantage of some longs. So I'm never looking to hold a short past the first sticky area. So, you know, many times before within this range, talking about 30K being revisited, 29K, you know, looked very weak over here. Price finally breaks down. All right, we have a move outside of the lows of the range. Okay, now mind you, up to this point, right, we had excessively negative funding. So if we look at funding, if we look at something like open interest and stable coins, it goes along with that. We had an increase in open interest in stable coins. We had funding being excessively negative for a prolonged period of time. But the one thing that we were missing was a sign of strength in price action, right? So very simply, as I've said many times before, you know, a sign of strength is, you know, if price is still respecting a range, right, and continuing to make progress lower, a sign of strength would be something like retaking a recent swing high, right? Retaking an area that had served as a ceiling more locally on the way down, right? So if price is in a downtrend, right, the first sign of strength is when price potentially puts in a higher low and a higher high, right? In some cases, it might be, you know, barely noticeable. In some cases, it might be extreme. You know, you might have a series of lower lows and lower highs, and then you have a big squeeze up, and next thing you know, you're treating the last high on the way down or one of the more local highs on the way down as support, and price is finding support very quickly and giving you a very shallow pullback versus a very deep pullback. So in this case, right, we hadn't really had that at all up to this point, right? All we kept doing was compressing more and more. We had, you know, a range that had a very wide area of dispersion, and then after we broke down and tested below 30K, right, the range that followed after that was much tighter, right? And we never were able to trade above any of the more local highs. So any kind of sign of strength, right, after all of this activity, really what it would be just is something like this, right? So if you look on my Twitter, you know, I said, okay, the bear is done, right? At this point, the bear is done. The bear is going to sleep, something to that extent. And it was because at this point, we had made a move down towards the low. And right before this, I was saying, okay, if we break down any lower now and we don't continue, I'm going to look for the long, right? Because at this point, it just means that sellers have really shot their shot, all right? You're looking for, if this is a very important range, right? And these lows are very important, these highs are very important, then the amount of participation we see at them and the course of action from price is going to be very significant in telling us, what to expect, right? Or rather, what we could expect or how serious this move is going to be. So we had a break below 30. We had a break towards the lows again, and price found its footing, and not only found its footing, but was able to trade back above a more local high. It was just one sign that, okay, the market is trying to move to the downside, but it is doing a poor job of doing it. All right. And then what you have to do is, like we've said many times before, and this is, leave your emotions out of this, trade the range until something changes. Okay. So if you're reaccepting back within the range, you're starting to trade back above local levels that have defined that range, right? Have defined, let's say, in this case, lower progress down. If you're trading, back above those levels, retaking those levels, and more importantly, price is going bid above those levels, just treat the range the same way you did prior, right? Play towards the middle, play towards the highs. Look for support at the middle, right? If there's lack of resistance, and I'll get into that because I long to resistance, but you're still going to trade the range as if nothing changed. It's just the best practice, in my opinion, is to act like it's going to continue to do what it has done because it's gotten really good at it. So that's what we had. We had, and this was just from a structural standpoint. But here's what I think. Here's part of the thing that I assume took place. You have this range, right? Throughout this range, funding is very negative. Okay, we see that open interest is going up on stablecoins. Talked about this a bunch of times. All right, that means that at that point they have no exposure to BTC because it's not like a coin margin perp. So in order to get exposure and to close out the short, they have to buy back twice, essentially. So close the short out by buying back and then buy again to get exposure if they're on a USDT margin perp. So we have throughout this range an accumulation of that negative funding, right? Persistent indications or evidence rather that there's aggressive movement towards the downside. And this is the first sign, again, that price is trading back above a more local level. I think that, and we saw a very firm bid from FTX. We saw very aggressive TWAPing from FTX, right? So time weighted average price, basically just using market orders over a period of time in a set interval of time. Think about it very simply as, okay, let's say I'm going to buy $1 million worth of BTC, and I'm going to buy, every 10 minutes I'm going to buy 5 BTC, right, until I've satisfied that requirement. So we saw this aggressive activity, and what I think it was is that FTX, so Alameda, saw that there was an imbalance in the market, right? Saw that, for example, on USDT margin futures on Binance, that there was good reason to believe that there were a lot of traders that were hedging, that had been hedged from higher slightly or even lower, also short. There was a mismatch in that positioning, or rather an imbalance, and because of that, there was a vulnerability in the market. So what I think FTX did was, I think what they did is something called momentum. I'm still a little sick, I guess. Momentum ignition. So they see a pressure point, right? For example, we talk about this when we're trading footprint or we're trading, trap trader setups. If I see that there's a ton of activity into the low and now we're trading above that and there's a reason to think that these traders are trapped, well, I'm going to lean on them. So I'm going to get aggressively long in hopes that price is going to be trading higher, right? I'm going to help push against that side of the market. That's what I think FTX did. I think that FTX saw a big imbalance, right? They saw a weakness on part of whoever it was that was positioned poorly, and they said, let's push them until we could, we hit their pressure point. And not only that, and nothing against Alameda, but I said this after Sam tweeted. I said, they know exactly what they're doing, okay? Sam Trabucco, Sam, Bankman, they know the how much the market adores them, how much it pays attention to them and heeds their advice or heeds whatever their positioning is, the market is looking to follow. So if they got into position, right, if they filled a substantial portion and they knew that they were going to really step on the gas pedal. What better way to really add gasoline to that fire and to add, we'll just say, wind to their sails, than to tell the entire market that they were doing that. All right. So FTX basically sees an imbalance in the market, or it could have been, it doesn't have, maybe it wasn't Alameda, but I think it was, right? I think they saw an imbalance in the market. They saw that someone essentially offsides for a long period of time. They saw the opportunity. They got on Twitter. They state their intentions, right? Oh, we think, they said something kind of innocuous or maybe not as obvious, but we're still buying or something like that. And they knew that would get the dominoes going. And think about it, Alameda, let's say they're executing on their own platform. One of the major components of using a market order is transaction costs. Do you think that FTX has to bear the burden of what makes a market order poor to begin with? One of the aspects of it, other than slippage? Well, cost is one thing. So imagine being FTX and you know that you could push the market and you don't have to pay the cost to do that besides slippage. But after you're pushing, everyone's going to follow you, right? So I think that's essentially what happened. So the thing about that is, and I hope I'm not drowning on too long. The thing about that is, they also knew, for example, they knew that Tesla had their earnings. And this is my theory, so this could be complete batshit fucking conspiracy. But they knew there were some, let's say secular tailwinds potentially, right? Okay, so we have, this imbalance in the market. Not for nothing also, to go over this, there was a big call buyer, all right? Big call buyer buying further out. All right, when someone lifts a bunch of calls, market makers have to buy spot. So that definitely, the gamma effects of that might have helped sort of exacerbate this move. But they also know, okay, we're doing this into the weekend, and people are going to be buying in anticipation of Elon Musk, having bought more Bitcoin. All right, it's sort of fresh in everybody's mind. Elon Musk was with Cathie Woods, and he was with Cathie Woods, and who else was he with? Shit, I can't think of who it was now, but he's with Cathie Woods and two other people. I must be a little bit sick still because my brain is not working. But either way, there's this idea that, okay, he's speaking positively about BTC. He only pumps, he does not dump, as he says. Everyone loves him. He's adored. And we know that earnings are going to be released after market close. So there are a lot of people that are going to be buying the rumor, right? So there were all these net positive flows that definitely didn't help anyone who stood in the way of that. Jack, okay, awesome, yes, Jack, right, Jack Dorsey. Who's the homeless guy who stood in for him with the beard? I don't know. I think he was a Vietnam vet. I'm just fucking around. I'm just kidding. God bless the vets. But the tie-dye shirt and the beard, okay. So anyway, Tesla's earnings come out, and as you can see, digital assets net, there's no increase, right? 1331. So you have that. You have Amazon. Rumor of Amazon that they're integrating BTC. You know how much of a fucking headache that would be for them to integrate BTC. But there, again, with crypto, there's such a romance, right? There's such a romance with BTC. We love it so much, everyone else has to love it too. It's like, first of all, they just put out something recently about hiring for blockchain and hiring for digital assets. Okay, that was just recently. The idea that they have already integrated something, again, the hit rate of news coming out in advance of an insider talking, that hit rate is zero. If it's not zero, it's approaching it, right? It's definitely not something that you should ever act on. It's close enough to zero to where it's like, I don't fucking care if they said like Joe Biden was going to come out and say that he was going to build the White House out of Ledger Nanos that were filled with 100 BTC each. You have to confirm, right? You don't buy the rumor when it comes to shit like that. You can buy the rumor, but you better be selling before the actual release of the news. So buy the rumor, sell the news. So here we are. We have, and this is, this brings us to the more important points that I want to go over, right? I'm just going to lay out some of the more important levels that, honestly, they haven't changed, right? So if we look at We'll just look at the weekly chart first. So we'll put back on our weekly range levels. So let's get the magnet going. So there's our weekly. Let's get a nice W on that. What the fuck? Oh. Oh, whoops, I hit the W again. Oh, I have to hit... Shit, that's the hotkey. I hit control by accident. So weekly. Okay. I love this hotkey I have now set up to do copy and paste. It makes life very easy. So here's some weekly levels, right? So this previous weekly range, right, this was of paramount importance for the entirety of this range, right? We've been leaning on this for a long time now. If you've been following the streams now for a while, you know that this is something that is not new whatsoever. So we have our weekly levels, right? This weekly candle clearly just started. It started off very ugly, right? But again, we have 6 days to improve that. And then we have our daily level, right? Daily highest close. We could put a lowest close at this point. But if we're just kind of encapsulating the range, those daily and weekly levels are important, right? Why are they important? I just want to touch on this really quickly, and I've touched on it all the time. You get people that are talking about like yearly opens, quarterly opens. Okay, when it comes to levels on the chart, right? Horizontal levels more important than any kind of diagonal level. Horizontal levels never change. When it comes to horizontal levels, when it comes to supply and demand zones, it has to be built around the idea of supply and demand. It can't be like, all right, what are we going to arbitrarily assume value to because it's like a high time frame that we could find on TradingView and then attach a line to it. The daily and the weekly levels are extremely important because they are most commonly adopted by the broadest set of traders. Okay, so if we all think if we woke up in a parallel universe and the 35-minute candle was the most important candle and the 35-minute swing highs and swing lows in the chart were the most important, it wouldn't matter where the daily closed because the 35-minute chart is the thing everyone's going to be looking at, right? The 35-minute swings, the 35-minute supply and demand zones. The idea is these levels, right, in a technical market, in a technically driven market, are important because other traders are acting upon them. So you have to go with the ones that are most commonly used. So we have our daily and weekly levels on, and you can see that, for example, where we ran into resistance, and this is a lesson in when you approach something from a distance, as I always say, when you approach a higher time frame area of supply and, higher time frame supply and demand zone, higher time frame resistance, in this case, a daily level up here, when you approach a level vertically, okay, it's going to make you feel, if you're flat and you're going up, that you should jump in. It's a FOMO level. Right? If you're dumping back down, okay, something like this, if you're dumping back down to support near vertically, so more like this rather, all right, like this as well. If you're dumping back down vertically, right, and you're in position, you're thinking, holy shit, it's gonna drop another 10K. I haven't seen it do this any time, but this will be the time when it fucking goes to, it goes from 35K to 10K. Like I'll be the one who held through that, and screw me because I should have known that that's what BTC would eventually do. These moves provoke a ton of emotion, and because of that, they catch a lot of traders offside, right? They create a ton of liquidity, right? You're racing into a major level. It's like an oh fuck zone, and that's the best way I could put it. And again, these streams are not for children. So you bring a ton of participation into the market. You could bet, right? If you're just gonna take anything from this moving forward, when you approach a significant resistance or approach a significant support from a distance, not grinding down to it over time, right? When you approach it from a distance vertically, so in less of a grind like this, more of something like this or like this, when you approach it from a distance and you have that characteristic, it's very likely that is going to be the type of move to fade, right, into the higher time frame support and supply and demand zone, right? In this case, it was between a weekly and a daily level. All right, so approaching it from a distance, all right, very far away on a short squeeze. Okay, so more importantly, you're approaching this level, okay, and it's not necessarily organic buying. On the way up, it is exhaustive, sort of thin, spreads blown out, short squeeze type of behavior. So it's not like you had a bunch of Coinbase and FTX buying up here. You had that lower, and they got the dominoes going. All right. Honestly, and this is just a lesson in how you can have all the conditions and you don't get the outcome that you assume. Honestly, this kind of grind down to support, by those qualifications, would have been the one you would assume to maybe have broken. But in this case, right, didn't occur that way. Right, we had the move back down to support, and again, there was some type of extraneous or outside influence. In this case, I would assume that it's FTX playing some type of 4D chess. Right, so that brings us to where we currently are, and the daily and weekly levels are so important because you get a ton of participation at them. You have the most eyes on them. So where we are right now, right? In my opinion, and I said this on Twitter. I'm neutral to bearish. So what does that mean? I don't think we're going above 40K before we go down to. I don't think, that we're going to be having a daily close, for example, a high time frame close through 40K until we revisit, 36, 35. So I'm neutral, right? Because hey, we're back in the range, right? But I'm bearish because I don't think we're going to be ripping up to the highs again, other than to be sold off, right, one more time, right? So what I assume is that at these highs, that you probably have a lot of trap longs up here, and you could bet that they're thinking, holy shit, I'm going to get back, I'll be able to get out of this without losing my nuts if price comes back up here and they close their position out, right? Because there are some fresh longs that are opened up here, unfortunately. Okay, so if price moves down a little bit further at this point, you would expect that, they would squeeze and we might have a little bit more of a drop back down to, again, somewhere around 35, 36, which is, just look at the entirety of the structure. I always say that the weekly levels, the daily levels, they're very important, right? Because they're commonly used by the most amount of people. So again, those are high volume levels. 40K is going to be a very important level because it's just a very large, sort of whole number like that stands out. But aside from the weekly levels, the daily levels, just zoom out at the chart, right? Look at the chart on the high time frame and see where have we been spending the most amount of time, right? So you can look at it and you look at a profile and just say, all right, where's the value area for this? But for example, in this case, we're just back within what is a range, right? So whether you do all the way up to the highs or at these lows, like we spend all of our time within here. This is not a trending market. This is not to be confused with a trending market. Within here you have lower time frame trending moves, but by no means would you say that the market is in a period of, the environment, we're in a trending environment. Not at all. So we're ranging, so we're looking at the levels that are most significant that we find within a range, which are going to be highs, lows, midpoint, right? Point of control. In this case, if we look at the point of control, it's probably going to be around 33, and then the next highest volume node is going to be at 30. It's going to be between 35, 7, and 36. Okay, so the bulk of the activity is going to be in the midpoint, right? We see the imbalances at the lows and highs, but we're back within the range. Okay, so for me, what I need to see is, all right, if we're to break down now, so let me just change the color of this maybe. So this fib. Actually, I didn't have it extended. That's why. So you don't have to get it perfect, right? You could see that, whether we're going all the way down to the lows or we're going up a little bit higher up to these wicks down here. The idea being that, and this is a point that I want to drive home because you see how sort of, not fickle, but how flimsy, not flimsy, God, how maybe, I don't stress the importance of finding the exact place to anchor the fib. You're looking for confluence, right? So that midpoint, we know it's the midpoint of the range, right? We know it's the midpoint of the range, and more importantly, all right, where we saw this squeeze occur, which was when we started to crest over 36, things got really violent, was where we said things would really get violent leading up to this. So for the last 2 weeks, I talked about, okay, the most important levels now, they're not necessarily the high up here for any moves up, right, for any longs, but it's going to be the highs over here, right, because this range went from this amount of dispersion to this amount. So the key contextual levels for this structure as we evolved and moved lower, began to lower as well. So at this point, what that meant was there were a lot of stops that were uninterrupted that were left behind us. So you have, stop cluster 1, 2, 3, 4. Once you start this process going, it just creates that sort of dominoes cascade effect to the upside. So what I would be looking for now, honestly, this is a very inefficient move, so I would expect actually deeper rather than shallower. In the case of a big spot buyer that was continuing, all right, and now it feels like it was a little bit of a ruse, right, because of the, the rumor that people were buying on, maybe the Tesla news that didn't come to fruition. I don't think that maybe, I don't know if we're going to see the same spot aggressiveness, so I don't know if we're going to see a very shallow dip. When you have, for example, if we just look at the TPO chart, if we're looking at, yesterday's weekly candle, we already lost a point of control. We're outside of value, yada, yada, yada. We know that we already sort of saw some kickback and long squeezing. But what you would expect would be something like maybe a revisit to the single print gap, if anything. And at that point, the market is very eager to sort of enter in on this trend, and there's really not much of an opportunity to get long. And you see that the market continues to move away very quickly and makes the participants continue to reach for it rather than get filled with some type of limit order or passive method. But this wasn't an efficient move, right? This was a short squeeze. So more often than not, if I look back through all of my experience, it's not that you're going to look at something like, if we just look at this from a structural standpoint, I wouldn't anticipate that like the Pico top here or here necessarily gives us the adequate amount of support to really rebound off of here. I've longed already. I am in a long currently. I think that we're going to revisit this point, right? But I think, again, we're going to reject lower. I think, if anything, we're probably going to cover this gap. So cover that gap. That's an inefficiency. What do I mean by cover that gap? I already mentioned that that's single prints, right? So market didn't spend really any time here. Really nothing was transacted here. That's a very inefficient move. Right, very efficient for FTX and whoever took profits at the high, along with myself. Thank God I bought resistance at that point. You just have to have experience, I would just say, in screen time to know when to buy and when to wait for a retest. After this type of move up, after we were sort of floating in this area, I just longed this. I wasn't even going to bother for a retest. I just waited for like a 5-minute candle through it. But it was great long because my TP I thought was going to get hit like a day later and got hit like 5 minutes later. I mean, for those of you that followed that post on Twitter, that was mind-blowing. I said, like, we're going to get a move to 40K, and then 5 seconds later it was at 40K. But, so normally in, very bullish conditions, right, where, again, a ton of organic buying, if this was like some type of breakaway gap through a level, right, so the difference is this is a breakout into a level rather than through. So if this was like a breakout above, we had a huge move above this range, I'm expecting kind of a shallow pullback, right? I'm not like assuming that the pullback that might eventually come over time, but the immediate pullback that leads to continuation, I'm not going to assume that it's going to be, coming all the way back to the high of the range. I'm going to assume it's going to happen above, on the low time frames. You're going to see a consolidation occur, but that's a breakout and breakaway through a level, right? This is into a level. It's been faded at this point. So if anything, what I would expect is that we cover this gap. So what that means is patching up all of this work down here. And essentially going back to really the origin of the move, which is not that big of a deal, right? Because the origin of the move is the midpoint of the range. So I just don't think that you want to be, and I'm, like I said, I'm in a long right now because I think we're going to get a little relief. That's how I trade though, right? I don't want to sort of influence anyone to getting into a position that goes slightly against them. And I think, but I do think that I'll be closing this long out in the near future, and that we're going to close this gap either way, right? And then at that point, what I would want to see is I would want to see that, the meat of this area, I would want to see that that area is where we see development occur, right? We have some type of lower time frame price action that's showing strength, and it's very nuanced, but it's not, because what we're looking for is like, if we're looking at a price spike into this level, and then we have some type of lower low, and then higher low and a higher high, and we're seeing the signs of buyers being able to bid this up, and levels being retaken on low time frames, it's a sign of strength, right? It can offer you some type of trigger to get on the long side of things, and that's what I think I would want to see before I could say this is absolutely a dip buy opportunity for a larger swing. A lot of my trading right now is going to fall back down to lower time frames. I got that awesome long yesterday, but I do think that I would want to see price really develop around the midpoint of the structure before assuming that we get a much bigger move back up to test these highs. That's just one trade opportunity that's setting up, right? above, so above 40K on the high time frames. If we have something where we're finding support above 40K, we get a daily close through, or let's say the price just starts ripping back up. You know, this right now, so for example, you have a good amount of people that are short up here. You also have a good amount of longs right now that would love to get out. So if price comes back up here and doesn't reject, and suddenly we are just doing what looks like round 2 of squeeze over here, you know, there is still a substantial amount of open interest that is left that we could assume was actually still part of this buildup. So it's not like we squeezed what are potentially all of the shorts that are in the market or all the hedges. You know, if we look at sort of like the progress from here to here, just from low to low, you know, open interest went up, one sec, open interest went up like 38%, and from the drop here, we're only down 20%. So throughout the entirety of this structure though, you know, from this low to where we are, we're still up like 100-fold, 100%, right, 2x, in open interest and stablecoin margin contracts. So there's good case to be made that if price continues to find footing higher up, right, and now we know, hey, where's the market been accepted, where's it been rejected, right? If we look at the if we look at the TPO, right, we have some levels that are going to be significant, right? Ultimately, I would be expecting to take a little profit for this small long around the point of control. But if we move back up to this high again and we accept above this tail, it's not really a significant selling tail, right? This was a substantial move, right? There's good reason to assume that there is sideline capital, that there are shorts that are still able to be blown out. So this is not the most ridiculous tail. This tail is only, you know, it's a $350 tail. So when I'm saying tail, I'm referring to what some people commonly say is single prints also, but it looks like single prints, but it's showing you where the market was rejected at the top side, right, with this selling tail. So it's not like we have something that's looking like this, right? If we re-accept into this zone, right, so if we re-accept, you know, we're trading back above 40,500 and we're not seeing this, you know, this tells a very clear story. If we have something where, let's say we're moving sideways and now we're firm into that level, you know, you see this is like something that you'll only pick up on if you trade for a long time. You know, one of the reasons why I bought resistance here is I've seen these candles all the time where there's no wick yet that's developing. Its price just kind of suddenly slowly creeping upward. If we have that up here, you know, you're probably ripping up more. You know, you're probably touching 43, touching 45. So I think that this one is going to be, you're going to have to play this, you're going to have to be sort of on your toes with this one. Other than that, right, there's no, I'm neutral also. Like I said, back within the range. Would I like this? No. But if we start falling below the meat of this structure right here, all right, let's say that we have something where we pop up and then we're breaking back down again. Who knows how it happens, right? I don't like to really draw anything because then it gets taken too seriously. But if we're starting to trade below this gap, you know, into this low, for example, unless it's something that takes that low out and then trades up, I would be weary of that, because at that point, you know, this is an uninterrupted low, this is an uninterrupted low. You know, it's very simple for, you know, us to trade into this low and then suddenly you're at 33 and then you're back at 31 and the next thing you know, we're playing back towards the range low again. So in my opinion, you know, we're just back within a range, right? I can't be like incredibly bullish when there's good reason to assume that this move was, how do I put it, predatory. I think that it was definitely predatory. So I mean, if we look at funding right now, right, so we have a big options expiry coming up, the 40K strike. We see a substantial amount of open interest there. There's like 4 or 5 days left. Next highest strike is 35. There's really nothing that's between 42 and 44. There was an odd gap in open interest between an activity between 37 and 39 as well. It looks like it has changed since I last looked at it, but up until yesterday, it looked from 36 to 38. It looked like this. But you know, funding is it's neutral, slightly negative. Like I said, there's still shorts that could be squeezed out of this, but I would just be very careful, right? Because this is an inefficient move. One of the most important things that I always, have said to ask yourself, and we have a trader checklist that I've gone over in BlockRoots. Again, this is BlockRoots. Is has a market build a base for the move that it's put in, right? So, is this the kind of move that you want to build your house on, right? Honestly, for example, there's a lot more structure going on back here. Okay, there's a lot more. Just look at this area compared to this area. There's a lot more pivots. There's a lot more significant responses, checking of levels. Creating a ton of volatility initially. That all dried up, but for what has been a very significant move after a period of really nothing, and it's not like this is really vols are not like blown out from this move, that's I guess cool. It's like it put this move in and it's not blown out, but there's not really a significant amount of structure for us to lean on unless you go back here. It's not, for example, what do I mean like building a base? Well, building a base would be, for example, this was building a base. Let's say price, had actually started returning higher from here, right? And then we're trading above all of this structure. There's a lot more congestion here. There's a lot more two-way activity. It looks more solid than something like this. And I think that's kind of obvious, right? I don't know why I'm really explaining that. You can see that this is kind of a one-way trip and a gap. There's really no consolidations that we could fall back on, and that's why when we refer to the TPO, one of the reasons why we look at TPO and one of the benefits of looking at TPO is through compressing the day and showing us where most of the distribution occurred. We can see, hey, where's all the activity? And I mean, shit, these moves were nice on the way up. What you did was you built a base, right? Built a base, and we consistently traded above that area, right? But the last 2 days before today's open, you have a good amount of space, right, between that large squeeze. So that's not really something that I want to lean on as being a good structure to build off of. Another thing to point out, this is kind of a meme, but I say that this is important at times. So let's look at the CME contracts. So BTC, I already have this somewhere. One sec. There we go. The gaps in the CME are a meme, right? They're a meme because yes, they most of them, almost all of them get filled, but that's one of the reasons is the market has a very high ATR and it covers pretty much all areas on the chart. So part of it's survivorship. Okay, so any gaps created to the downside, BTC has only made higher prices, so of course that meant that any gaps to the downside probably have been covered, unless like magically it made a gap in that exact spot, but that didn't happen, obviously, right? So no, that's not raindrop bars aggregate. So they often get filled, okay, but there's really no way to act on it because it's like, all right, so we have a gap on the CME chart. Yes, 99 out of 100 of them get filled, but there's no telling when. It might be, hey, we have this gap, and yeah, it came back and filled it a year later. It's like, all right, well, I couldn't put a trade on that. But what I do think, and this is something that I haven't backed it up empirically, but I would expect that we would see probably some improvement in the performance of taking trades around it, is if we are close to that area, right? The closer we are. Because, right, let's say, we have this inefficient move up, right? Price is still within a range. You have this glaring gap that is standing in the way in the face of everybody. All right. Price is also not only sitting above a gap between trading hours, but a gap in price action. Right. So just this breakaway gap. Right. This big move up. It's not a gap like there's a bar there, but you understand what I'm saying. There's really not a whole lot that was transacted there. It was a very inefficient move. A vacuum, put it that way. So you have a gap sitting above another type of gap. A little bit of game theory, right? Price moves down lower, you're thinking, well, should I provide liquidity at this point? Should I step in the way of this, or should I just wait till this gets filled, right? And so you have people that step out of the way and are not willing to provide a bid, and then you have people that are kind of stupid and they're like, hey, I'm just going to short this because there's a gap. So you have sell pressure that comes into the market. So I think that when you're closer to these gaps, that you're more likely to fill them. And, you know, not for nothing, if you want to just add one more point on top of the reasons why this might get filled, hey, now we're back within the range. Hey, what do things do within the range? They move like price does within a range, right? They go from high to low. So I think that this is kind of, I think it's a really, I think it's a bad look right now. It's a black eye on BTC. I didn't say a black guy, by the way. I said a black eye. So this, you know, it doesn't help. Put it that way. It does not help. So yeah, I think, you know, as far as the high time frame goes, you know, we're stuck within a range, right? We're back within the range. I said the levels that I'm most interested in. Don't, you know, if you're going to buy the rumor, make sure you sell the news, or make sure you sell beforehand, right? There's definitely reasons to assume that something like, you know, a rumor about Amazon with BTC, you know, Tesla buying more BTC, all that stuff, right? That creates flows. Okay, just make sure you're not the last one holding the bag, expecting it to come to fruition, right? This is like the one of the things that is passed down for ages is, you know, buy the rumor, sell the news. All right. At that point, people are long into that event. Okay, so there's only, you know, like I've said many times before, you know, when everyone is long, that just means there are future sellers in the market. And the reason why we had this move up was because there were a lot of shorts in the market, right? All there was left to do were buyers to come in, right? From positions closing out and from positions opening up. Does anyone have any questions right now? I'm just going to go through. So this is not looking good. I'm still long. Right? I have a good entry on this more recent long. Initial long that I played was I played the bounce over here, and then I scaled back into a long at these lows. Like I said, I think price is going to move up a little bit more. I think we're ultimately going to cover the gap though below us, but I'm happy to be wrong. You know, ETH looks really shitty compared to BTC. I don't care what anyone says. Like, ETH does not look good, and that plays a pretty big role in how people position in the market. Candles that look like this, you know, they tell a pretty one-sided story. So another thing to do is, you know, we're still stuck within a range. Like I said, I don't think BTC is making an all-time high anytime soon. You know, if you look at ETH right now, there's kind of an uncanny similarity between, you know, this high, so the behavior, breakdown, behavior afterward, and going back. It looked many times before like ETH was going to rip up and go back towards all-time highs, right? Or just this was a bullish period in 2019. But it ended up being that there were plenty of squeezes to expect, right? It's the same thing as like the She candle, right? That got everybody bullish. My point is, from, you know, I don't want to say that and say that this is going to happen, but you can't, you know, allow emotions to dictate your trading, right? You're back within the range now, treat it like a range. You're outside the range, hey, you know, trade it differently. But one thing to remind yourself is, all right, so price was doing nothing for weeks. It was doing nothing. The first time it does something, it's due to a short squeeze, right? During, even if it's a downtrending market that's very, you know, high conviction to the downside, or if it's a more sideways grind in a bear market, moves occur like this all the time. They're called rallies. All right, so a rally is not price moving up in markets. When they say like, oh, the market is rallying, a rally is specifically, right? Usually, it's, you know, it's going to be fueled by short covering, and it's in bearish conditions, right? It's a period of positive price action in a bearish trend. So, BTC below 37, yeah. Let's see. Let's see if we get, you know, we'll see if we get the response at this high, back at this structure. And this is going to be pretty telling of how willing or how, you know, eager the market is to get back into position, to buy support. So that is between 36.46 and 36.672. And maybe we get something that spikes into this low and we get a very strong response, right? But if anything, I'll just, if we start drifting below these lows again, I'm just going to close that long out. But we'll see. My phone's vibrating behind me. Let me just look at the chat real quick. No, like I'm. So here's the thing. I was. This is a good story actually. Oh, this is really funny. This is like sad to it. This is like fucked up to admit. So I told Josh this morning. So I woke up this morning. Check this out. To a liquidation notice. Right. I think I might have. I've let positions get liquidated instead of using stops. Right. If it worked out that way, using liquidation. If the trade works out that way, right? If the risk is defined a certain way, if you allow a liquidation to take place instead of using a stop, you don't have to worry about slippage, right? So there's only times when the trade is perfectly defined where that condition is met. That is not something that I would suggest trying to do. But I've never been liquidated by accidentally being liquidated or letting a trade go against me and liquidating an account. I've never had that happen. So to preface the story, I was long Link. I thought I sold Link. I've done this many times before, and this is why you have to if you're a manual trader and you're clicking, you have to pay attention. I was trying to sell my Link, and I didn't change the template from, and I'm sure many of you guys have done this before, honestly, so it's going to be funny. I didn't change the template from limit to market order, right? I was on an exchange that I don't spend too much time trading things other than BTC. So usually I trade BTC through Quant Tower, which trades through API. But I'm right on the exchange. I sell. I never sold my Link, right? All it did was place a limit order. Okay, I think I assumed that I canceled it, or it doesn't matter. I thought I sold at market. I intended to sell at market after the pump. I never sold Link. So I woke up this morning, and I see that I have a liquidation notice. So I had actually had one small remaining limit order to fill a short for Doge. All right. I don't have a problem admitting this. I had a limit order left to fill a short for Doge. This was high up, and it was just like the small, last little tranche to fill a short. Right. I had already shorted. There are some times where the exchange UI won't load the orders on the chart anymore, and I left it and I didn't notice it, and it was a small order, didn't matter, and that was liquidated. Now there was nothing in that, so the exchange is split up between contract account and spot. There was nothing really in that contract account anymore, so that position had gone against me overnight, right? This is funny. Gone against me overnight, liquidated for nothing really. So I wake up and I'm like, oh fuck, what am I gonna look at? I'm forgetting that I barely had any contract. I didn't have much money in that contract account. But then I look at my account. I'm like, this one exchange, and it's up a lot. I'm like, what? What's going on? Then I'm thinking, I'm checking for my phone. So I'm like, is my phone app not, synced right now? Let me swipe out of the app, restart it. And I look again. I'm like, this is up a lot. What the hell's going on? I noticed my Link made up for the loss either way. So I was still long Link, and yeah. So with Link, and I'm just talking about Link, but you mentioned Sushi and Aave. If BTC finds its footing, a lot of these, and let's say BTC finds footing at 35, right? So let's use 35 and let's talk about 40 as well. If Bitcoin does anything but puke towards the lows, right? So it finds support, right? We see a spot buyer. Then yeah, there are actually a lot of attractive charts that I think you want to look at on the weekly. Okay, so if we look at Sushi, right, there's been a lot of effort towards these lows. Okay, so think about the same thing with BTC, a ton of effort towards lows and not able to put prices lower. Sushi, DOT, same thing. If you look at DOT, for example, you have this low, high, slightly lower low, lower high, lower low, lower high. But what is this doing? It's compressing down here, right? If you were to take out an RSI right now, you would see a divergence, right? Because you have a big move, big bounce, smaller move down, smaller bounce, smaller move down, but slightly bigger bounce now. So what it's showing you is the market is really trying to throw its energy to the downside, but it's just not giving, right? So where's the market trying to go? It's trying to go down. Is it doing a good job of getting there? No, it's not doing a good job of getting there anymore. It did a really good job up here, but it's starting to slow down. So momentum is beginning to shift, and I think if you look at a lot of these higher time frame charts, for Dot, for Sushi, for Link as well. I think honestly for Rune, right? I know the shit that's been popping up with Rune, and actually, since I've last looked at it, it doesn't look that good now, so never mind. BTC drops now, and you start to see what has strength and what has weakness. So there's one reason why I, for example, will, let me just change this template. There's one reason why I look at this DeFi chart after a big move. So after a dump, after a pump, who is outperforming. So you can see that ZIL is still up considerably, Kava, Link, SRM, BTC, AXS. So these are all the better performers. FTT hasn't done too much, right? Comp hasn't done too much. Ray hasn't done too much. Perp has actually done well, though. Now, this is going to be based on where your look back is, okay? But after a correction, so let's say when we find support, right? If we find support, down here, BTC finds its footing, I want to be looking at this chart and seeing, okay, who's moving out of the gates fastest, right? So I think, that with the weekly chart, there are some things that are really setting up for positions that I would, build and swing, right, for some type of multi-week trend. So just consider this. If the chart is looking good on the weekly, like it's finding support on the weekly, that incorporates almost every type of trader to agree that the chart is looking good, right? Or it's the chart that the most amount of people are going to be trading under. So for example, if you go up to the weekly chart, you're including position traders, you're including higher time frame swing traders, and you're including all those smaller flows below. So your scalpers, your intraday swing traders, your momentum traders. Every type of trader at that point is seeing signs of strength, right? So your other time frame participant, your higher time frame trader, if they are starting to put in a floor, if they are starting to look at this, put yourself in the shoes of a person who only trades a weekly chart. If you start to see, all right, we got a swing failure on the weekly, it looks like it's finally starting to show support, momentum to the downside has subsided, maybe we're starting to retake levels on the 4 hour, on the daily, well, then why would you continue to try to fade this if at this point you're going to be shifting the flows of basically all participants in the market? And that's why I stress, all right, so you're looking at the weekly chart, you're having those larger, higher time frame traders that are getting involved that, don't get involved in lower time frame ranges, right? And they typically are going to be moving larger amounts of money, and they're going to be using, they might be getting filled with some type of good till cancel iceberg or, limit orders at the lows, and they're more patient, right? They're lower time preference. They are a little bit more agnostic to lower time frame movements, or they're less sensitive to lower time frame movements. So when you start to see this occur in alts, for me, it's like I'm not going to fade that anymore, right? But now I think it's all sort of contingent on what BTC does, and it always is, right? Yeah, so I thought you guys would like that liquidation story. Like I said, I mean, it was on Phemex, and I had transferred most of the, because if I'm trading perps, I won't put a ton of money in the contract account. I'll put just enough to be able to use as margin, and then I'm using leverage for those perp trades. But I thank God, it could have been more, honestly, because I had transferred money out back into the spot account when I was getting behind the spot position in BTC on the break of 35, and I still left money in there though. But it could have been it could have been worse if I left the original amount. It wouldn't have been a crazy amount, but that would have been a really poor oversight, right? So it's easy to get distracted, honestly, and that's one thing that you have to make sure that you guard against. And not for nothing, refresh your page too, because sometimes on all exchanges, your order will disappear. And if you're zoomed in also. So if I'm looking on the lower time frame chart, if I'm looking at Doge on a 5-minute chart, and I'm missing that, hey, on this 30-minute chart, you still have this, and this is ruined, so what the hell am I doing? If I'm looking at Doge and I'm monitoring, the last chart I leave it on is the 5-minute chart. And meanwhile, on the 30-minute chart, I'm forgetting, hey, you have a short position that was, left up here originally. You forgot about it. So, No, Stormzy, I've lost. Yeah, I've lost a lot of money trading, but it's because I've also made a ton of money. The more money that you make, the more money you're going to lose. Like one of the better things to say is your biggest loss is probably ahead of you. And I don't mean the more money you make, the bigger your losses are going to be with respect to your, you're going to start taking larger losses than you did in the past. They're going to just grow. They're going to grow with respect to your account, right? So I've taken substantial losses. Like I've lost over this year from the top, right? I've lost over $1 million. So I've lost, yeah, well in excess after BTC dropped. But I've made it back for the most part. And that's because I'm also trading with a much larger account, though. So it's not like, if you lose $1 million but you only have two, hey, it's a big fucking problem, right? If you lose $100,000 and you only have $200,000, you've wiped 50% of your account. If you lose $100,000 and you have $10 million, that's kind of par for the course, right? So yeah, I've taken huge losses, but I've never been. So one thing I saw someone post about this recently, Altcoin Psycho, not to, no, dude, not being honest. I took a fucking haircut. I took a haircut like back in January, I think it was, and I was really public about it too. And again, it was like I think it was an oversight. I can't remember what it was, but it was just it was kind of a mistake, and it was like a 6-figure haircut. But yeah, I've taken big losses, but I've also made a fuck ton of money. But I've never been. So Altcoin Psycho shared something not too long ago, and he was like, I don't think that anyone who's ever been trading forever has not blown up their account. And no, it's actually not the case. Like I've been trading forever, and I've had the risk management standpoint that comes from sort of trading traditional markets and having that background. So I never came to crypto as like a degen. So I've never been liquidated to where I'm like watching a trade go against me and I'm using excess leverage. But I've used liquidation before, right? But hell yeah, I've taken huge losses in trading, but I've always made a lot more money. And you're gonna make I hope that one day you can lose $1 million, right? I hope that one day you can lose $1 million, but it means that you've made 20. And so for all of you here who have aspirations of being like big traders, even though it sounds kind of cheesy, like one thing that happens is if you are growing naturally and it's not like some one-off shot, you're not going to be really thinking about the money anymore. You're going to really become indifferent to. So part of growing as a trader is like this disgusting process of suddenly becoming indifferent to meaningful amounts of money. So yeah, I love trading. There's a reason why I continue to do it. I mean, at this point, like I could do nothing for the rest of my life, and I'm not bullshitting you whatsoever. Like I'm pretty doxed. Like I kind of share a lot of shit. But I absolutely love, there's something thrilling about, it's like a chess and poker game combined. I think that, the most important thing is that you don't just sit at the computer all the time and trade when it's not appropriate. What you want to do is get better at noticing when it's appropriate to be in the market, right? When it's, time to be looking down the scope and when it's time to be doing something else. This is a great market to trade. So as long as it still offers opportunities, I'm going to try to make as much as possible. I have things that I want to do and things that I want to do for other people. And it seems like that value just continues to go up. And that's another thing. Whatever idea you have for a value that you would walk away for, you're going to get there and you're not going to walk away. Trust me. You're going to do it a couple times and you're still not going to walk away. So yes, I absolutely love trading. I hate it sometimes, right? But then I know, all right, I'm doing too much. I have to step away. I need a vacation. Still probably shouldn't have been as cocky with the DeFi bags. Yeah, that's why I dumped half of that shit. I dumped almost all of my shit, and I told everybody, listen, I'm not hanging on to DeFi stuff. And I always am upfront. Like I say all the time, I don't hold on to things as long as some other people, because I don't believe, I have a skeptic inside of me with altcoins. So yeah, I miss out like on the 10x, but guess what? I don't give it back. I made the 4x, right? But I didn't make the 10x. But I made a ton of 3x's. So that's the point. I'm trying to hit singles. So I definitely don't like hold as long as like the people who have a ton of conviction and read white papers. So that's a problem, right? I mean, that's my style though. So, but I got to tell you, I had a I had a little Binance Smart Chain bag. It's not little, but it's a bag that I just didn't sell because it went like 90% down. I was like, I'm not going to sell this. And that thing ripped and it was missed. So, but if you're 90% down, like, why are you going to sell? Right? Something like that, like, it's a sunk cost at that point. Just going through the chat real quick. Just kind of riffing because this market's not doing a lot. I'm not willing to stop myself out of the trade yet. So, a lot of people make a lot and then give it all back, Ronan. So you have to have a system. You have to just be executing based on a predefined system and having these checks and balances that you put in place so you don't give it all back. You feel like since you've started, let me just make sure I have my screen on the other side open. So I gotta rip myself out of this. If I'm looking at the chat, I don't want to lose. Oh, it's not. All right. Let's see. Focus on trading. I've lost creativity. Yeah. So Denick, one thing. I talked to my wife about this recently, and so I am not old, but like as you get older, like you're not as sharp as you are in your 20s. So I'm like, what multivitamins can I take? What is it? Am I like getting older now? Is this part of like losing your, your not mental acuity, but your, creativity, whatever it is? If you're looking at a screen all day and you're looking at just, candlesticks and footprint bars, and you're going to become more of a trading brain. You only have so much bandwidth, right? You're taking energy from other things, and you're probably hopefully getting good at trading, but it will, it's a fixed system, right? You can only get so much out of it. So if you're going to be focused on trading, you're going to be taking from something else. So I think it's really important to have a breakup in your trading routine. And for me, exercise is extremely important. Getting outside is extremely important. I can't wait. So I'm closing on my new house on the 3rd. Once I do that, I'm fucking redoing. So we just bought a house on the water. So I'm redoing the whole backyard. We went from barn lifestyle horses to, now horses are going to be boarded at a friend's place. And we're moving. This spot that we got was like, you only have like 1 in a million chance to get a really nice spot like this, and it was an incredible deal. So I plan on just spending a lot of time outside and doing a lot of stuff in the yard because I know that's really important, right? I know I need that breakup because it's the summer and I don't think we're gonna like rip to all-time highs soon. Diesel, I think the course is for people that have some type of foundation, honestly. Thanks, Matt. Matt's been with us for a while. Yeah, so I'm not a project picker. I don't know. I don't believe in half of it, honestly. Like it all follows Bitcoin, right? Bitcoin sort of creates the confidence in the market in the first place. And yeah, no, I don't mean to say like none of them are, but it's sort of like the Pareto rule. Okay, it's a very small few are going to come out of this, and I just don't think that I have the skill to pick them. I know where my area of competence is. Doesn't mean that I don't have like small bags and things that are kind of insignificant in size and we're going to just throw it away that are investments, because I'm not saying I'm completely inept in that regard. Like if something strikes me as a good idea and it doesn't really require a crazy explanation, I take that as okay. If I find that attractive, a ton of other people can too. So thank you. So we'll see. I mean, a lot of people I think are long into the ETH shift. So I can't imagine that the market can get that much longer, but it does have a actual structural impact on the supply. So that's meaningful, right? So I mean, as far as order flow, like we go over that in more detail. I always say we, but we don't really do like classes on the Discord or anything. We have a course, so it's covered in detail, right? But it's covered in detail. So is footprint. Footprint and TPO is as well, market profile. But at the same time, like you have to build on that, right? A lot of it's nuance. So take care, Matt. Thanks for stopping in, dude. So as far as order flow, what I'm looking for are areas where there's a ton of participation coming into the market and there's no result. A lot of the times that's what a majority of my trading is around. Are we seeing a ton of participation come into the market that's yielding a result, right? So are we getting an aggressive spot buyers that's coming in, right? Are we having sellers that are continuously fading the rally like we saw up until yesterday? Part of that is considered order flow. So you could look at funding and consider that in a form order flow analysis. When I'm looking at footprint charts, and just to briefly touch on it, one sec. Actually, it's not gonna. A lot of the times when I'm looking at a footprint chart, I'm looking for sort of trappy setups where we have, a ton of activity come into the market, right? A bunch of aggressiveness by one side, and no result. The market is absorbing that activity, right? So if we have, for example, like, I don't have one up right now. As long as looking like it needs to be cut. This is taking a second to load. I mean, there's a lot of things that fall under that sort of order flow title. We could talk about CVD, we could talk about the footprint charts. I would just say to check out the course, honestly. If you sign up for the course, you could cancel it right away, finish the course, and no one's going to chase you for your money. we don't need monthly subscribers, right? But for example, let's just look at this low for the sake of using it as an example, even though it's not maybe the best example. We have price making multiple swings into, let's say, what is a support zone, right? And again, this is just for the sake of giving this as an example. It is not a, sort of prototypical order flow setup based on what we're talking about. But we have an area of support. Let's say we're looking for price to, we're looking for support to hold. But I want to see, for support to hold, I want to see it sold and hold, right? So I always say sold and hold. So I want to see that we have a ton of selling come into the market and price is able to trade higher. So one of the better setups for me is, we have a pretty defined area. It's acting as support in the case of, using this and looking at it as a support level. And it's sold and we get a move through it, right? So upon the move through, we want to look for, let's say, an increase in participation. So if we have a certain amount of volume that takes place across this range on an individual level, let's say each candle is like 3 million, 4 million, on the move through, we have, 15 million, 20 million. So we see a ton of activity coming here, and there's a lot of sellers that come into the market, right? So you have a ton of aggressiveness, a ton of participation, looking at this level breaking, sellers are thinking it's going to lead to a breakdown. There's a lot of breakout and breakdown traders in BTC. Instead, price is now trading higher back above where all of that activity came in. And again, this is not the example. The best example would be like an egregious amount of volume below a low, very one-sided activity. At the Pico low of the candle prices, trading, we have like a hammer candle like this, and there's a ton of sellers down here, right? And then now prices, for example, trading back above all these lows, it sells again and it's holding, and we found support. Well, that's one of the setups that I honestly would get behind. Best case scenario is there's a lot of volume into this low, because that would lead to a big, or substantial squeeze. But if you're interested in this stuff, I would say to hop on YouTube, look at footprint charts, look up order flow, and then if you really want, check out the course, because we get into a lot of detail in the course. Where'd the chat go? But order flow is it's the most raw form of analysis of the market. You are seeing the actual aggressive buyers and sellers coming in. So, but I think I'm gonna wrap it up, guys. I'm like getting sweaty sitting in front of the computer. I gotta turn my central air on or something. I don't know if it's off right now. Shouldn't be off, but my wife is on vacation again with my sister back at the beach house that we were at like a month ago for my sister's birthday. So I'm by myself, me and the animals, and yeah, I'm gonna read that. I'm gonna read that Alpha Trader book, which is supposedly it's a phenomenal book. So when I read it, I'll let you guys know what I think. I can't imagine that it's not as good as everyone says it is. But that's that, guys. Stay smart. My levels, I think I labeled them pretty clearly earlier. But But yeah, stay smart because this is it's a squeeze, right? So one of my, more important questions is, was it organic, right? Was it organic, or was it, people that were forced? Never be a forced buyer, right? Never be a forced seller. Okay. So that is that. Everyone have a fantastic evening. I will talk to you soon.